I want to know in 1 or 2 words, how do you define a winning trader? Hit the chat. Tell me right now. How do you define a winning trader? First answer, somebody said profitable, like that. Consistent in following rules. That's another good one. Another person said consistency. Another person said consistency. Emotionally calm. That's a good one. Another person, really good one. Omar said they know their risk reward. Great one. Discipline. A trader that is disciplined enough to stick to a trading plan. Someone who makes a lot of money while keeping drawdown low. Risk reward. Brr. Good risk management. Consistent in their process. Someone that can consistently pull money. Consistent. Thinks in probabilities. Good one. Consistent, unbiased, good. Risk no more than 2%, no revenge trading. That's another important thing. Religiously selective. Evan, that's a good one. Risk management, following rules. Great answers, everybody. Trading rules, positive equity curve, following your trading plan, a trader that can track progress. I said a word or two, and I know some of you did maybe 3 or 4, 7 or 10, but that's fine. These are all really, really good answers. So let's break it down for him, Tom. Let's talk about it. I think one of the main ones that we have to talk about first is that they have realistic expectations. And I think that, to me, that's where we talk about winning traders not expecting to flip accounts in a month. They have that long-term vision, and they don't see this as a get-rich-quick scheme. What do you think? Could you add anything to realistic expectations?
Yeah, I think so many, and I think you've probably hit the nail on the head there, really. I think how many of us really in the beginning came into trading to make that money. We thought, oh, this is going to be great. We click a few buttons, we're going to make a load of money, and we're going to jet off into the sunset. Right? We all thought it, but you very quickly have to realize that that's probably not the case. And we are up against some of the biggest, largest corporations and hedge funds and governments in the world, and we're trying to take money off them. So them expectations is definitely dumbing them down a little bit and expecting that this is going to take us a good few years. And I think the longer or the more realistic your expectations, probably the quicker that you're going to get to where you want to get to as a trader.
Yeah, I think that's very well said. I would separate expectations from assumptions. You don't want to make assumptions about your trades, but I think you do want to have level-headed and realistic expectations about your performance and your pull, your profit, in the sense of, like, you wouldn't have a realistic expectation would not be to take a $10,000 account to $100,000 in 6 months. That's not a realistic expectation. So that's kind of what I'm saying. And it's separate from having assumptions that you make about a direction of a trade or things like that. So expectations and assumptions sound similar, and they might look similar, but they are not the same in this context, right?
Yeah, and I think just to just quickly touch on again, I think a really good example using what we're discussing a little bit on prop firms and getting funded is this 8 to 10% a month. Like, don't want to break it to you, but that is not really realistic every single month. 8 to 10%. You're talking like 170% a year compounded.
Right.
That's not going to be realistic. 30% will keep you in any great prop firm on Wall Street. So it's all about that expectation again. And that just gives us a real life example.
Another important one that I think a couple of people mentioned, and I've talked about this a lot, it's being adaptable, which to me is being willing to change rules and strategies as you progress and as markets change. So you have to remember, this is not a linear one line, one axis thing for your trading journey. Markets are going to change and you're going to get smarter. So those are two things moving at different speeds in somewhat of the same direction. So you have to be flexible and adaptable, right? Those are two words that we both kind of interchanged when we were writing this slide. What did you want to add to being adaptable, Tom?
So trading I see as a performance sport. We have a plan as we enter the market or as we start the day, but I like to put it into analogies. And for me, think of, say, a football game or a soccer game. Like, everybody's got their game plan at the start of a soccer game, but then that plan will change if they go 1-0 up or they go 1-0 down. And I think it's this very same in trading, in the fact that you may take a losing trade or you may take a winning trade, or the markets might be slow. So we as traders have to have a game plan for when something happens that we aren't expecting, or we have to have the ability to change the way that we approach that market depending on what is happening outside of our control.
Yeah. You know, it's funny. A lot of people in the chat said consistency. We don't even have consistency on here. I think that these habits, these characteristics feed consistency. But if you talk to traders who have been through markets for years, like I'm on my 6th or 7th year, the idea of consistency is almost an illusion. And that ties back to what you mentioned, how the 8 to 10% every 30 days thing is so unrealistic. It's an illusion. You know what I'm saying? It's not going to be attainable for the most part, unless you're one of the top hedge funds in the world getting the best information in the world. And that's just not who we are. We are retail traders. So consistency is almost impossible to fully grasp. You're never going to be 100% consistency. 100% consistent with your trading results. You're never going to not take losses. So it's how well can you take losses? Can you handle the losses properly? And we're going to talk a lot about that as we go into this further today. But I think you do handle losses well if you're backed by strong beliefs. That's that bottom right one that is listed here. And I think that the beliefs we have shape our perspectives, and our beliefs are the way you talk about yourself in certain situations, how you talk to yourself, if that, in certain situations. And I think that that's super important for when we're trading. How quickly can you talk yourself out of a trade that you knew you should have been in, but because your beliefs in that trading system are not strong, you talk yourself out of it and get out of it too soon, right?
Yeah, I completely agree with that. And I think in regards to your consistency point, results are going to be random to a degree, but I think that process-driven one describes the consistency, or feeds into that consistency the most, in the fact that winning traders focus and are so consistent on their processes. That's what leads to them outcomes. Now, I think a lot of losing traders or newer traders get very fixated on the outcome of a trade or the month, instead of focusing on what they need to do to get them from A to B.
Absolutely. I'm looking through the chat right here. Just a couple of questions. Someone asked, is this webinar going to be posted on YouTube later on? No, it will not be. And then a couple other people keep mentioning positive equity curve, back to our original question of what does a winning trader look like. One thing that I think goes along with that is confidence. We have that listed here, and we should definitely talk about that too. Being steadfast in your trading process, regardless of the short-term outcome, kind of going back to our first comment of the long-term time horizon, right? And I think the confidence comes, and we're going to get into this, from knowing that your system has worked in the past. You can't be confident in trading just being arrogant and egotistical, thinking I'm going to make money in trading because I'm me. You actually have to have data that backs that up, you know? Cool. So let's continue forward. Let's talk about the profile of a losing trader, Tom. So guys, in the chat, let's think about the mistake that you make most often in your trading. If you want to be honest and tell us in the chat, we would really appreciate it. What mistake do you make most often? Are you oversizing, overtrading, trading off edge, not using a system, just throwing too many trades around? What is the biggest mistake that you guys are making right now, if you could pick one? I feel like losing traders stand out to me, Tom, because they initially have a negative outlook on money, markets, their own future. They're initially very pessimistic, not optimistic people. How do you identify losing traders when we've done some of the coaching that we've done with people? How can you tell right away when it's someone's mindset that's off?